Ladies and gentlemen, K-Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is flat today on the S&P. It was down a little more today at one point, but it looks like market found some support in this vicinity. Made a push there. It looks like Nasdaq is still down though, about 0.5%. Semiconductor got hit a little bit, down 2%. Dow flat, Russell down about 1%, transport down 1%. Energy continues to make some move here, 1.5%. Everything else pretty much flat. Bitcoin cut a bit there, about 7.5% to the upside. Gold and silver still struggling. So let's stick with that 65-minute SPDR S&P 500 ETF. So yesterday we talked about that bearish divergence, and we did see that gap down. I am actually interested to see how much of a gap down that was this morning. So it looks like it was 0.5% gap down, and the market was down as much as 0.77% at the lows during the first hour of trading. And we talked about this yesterday. So what are the key things we talked about yesterday? There's bearish divergence. But what should be our mindset going into today? We want to give benefit of the doubt to the buyers, right? So actually, both of them played out today. So let me explain. So there was bearish divergence, meaning there could be a shenanigan. We talked about that yesterday. But at the same time, we want to give benefit of the doubt to the buyers while understanding there could be some shakedown. That was yesterday's message, interpreting the price action from yesterday. So we saw that 0.5% gap down, and we saw 0.78% decline during that first hour. So that shenanigan came about right at open. But at the same time, we wanted to what? Give benefit of the doubt to the buyers because we're still in an uptrend. So what happened? So first hour, high wave doji. Here's that long upper wick, long lower wick doji. And second hour, another up and down move. However, it looks like we did see some little bit more selling pressure there on the second hour. But on that third hour, we saw that bullish engulfing candle, meaning this green candle completely engulfed that second hour decline candle body there. And then there was that micro term support or resistance. We stayed above it on the fourth hour. And then we continued on the fifth and sixth. With that, we did fill this gap today, and that is a victory for the bulls. Why? Because the gap has been filled. If the bears wanted to materialize, wanted to see much more, that selling pressure continue much more, bears needed to kind of keep this gap open and then get rejected and continue lower. The problem with that is now we have solidified this support line here. You can see there, here, and here, and not to mention we're back above my short-term moving average. That all the battle was fought on that first hour. You see that. And the second hour, a little bit of whipsawing action just beneath that short-term moving average. Third hour, we closed above it, and we just closed that gap. So that selling pressure that we saw this morning, that selling pressure has been neutralized, right? So only problem right now, only question is, because we know that when the gap gets filled, it's going to act as resistance. We really didn't see much of a resistance towards close. We actually closed quite strong with that candle. So if we see any kind of upside pressure tomorrow morning, like some kind of a gap up, or at least first 2 hours staying above, let's look at this level right here. You know what I'm going to do? I'll give you this level. Let's move that down a little bit. Let's do it right here. So 391.46. So I'm going to propose if we can stay above, actually we have to stay above the the last hour's candle actually. This will be, yeah, so if you want this bullish pressure to continue, we need to stay above 391, 50-ish, 70-ish, above 391.70 in the first 2 hours. Just because we just filled that gap today, right? The gap just got filled, and I'm not sure if that, because once the gap gets filled, it's going to act as resistance. We didn't see any resistance today, so we have to see how the market is going to play out tomorrow morning. We stay above 391.70 first 2 hours, there's a great chance we could continue to move higher to the upside. There's a reason why gap fill was almost a must for the bulls if they want to see this thing continuing because of this, right? If the gap wasn't filled and we would have hung around here, that would have been pretty bearish going into tomorrow, unless there's some kind of a shenanigan gap up island reversal. So I would have to say overall, bulls have won because they're already in an uptrend, and bears really don't have much at this point, right? And because the gap just got filled, that selling pressure kind of died with it, and now we have this rising support that was just established. And not to mention, if I zoom out a little more, this is the level that we just talked about yesterday, and I tweeted out this morning, that rising pivot. And we got the rising support. So with that gap down and a rally today, we just got more support levels that bears need to go through. And we are still back above my short-term moving average. And technically, we're still in an uptrend. Low, higher low, higher low, higher low. So you guys know, when I say benefit of the doubt goes to the buyers, what does that mean? It does not mean the market is going to straight up. It means when we do see a downturn, it has higher probability of the price coming back down to cultivate what? Higher low, right? So yesterday we talked about there's a bearish divergence, there's some weakness, there could be some shenanigan gap down, or I didn't say gap down, but shenanigan downside move. We saw that, but at the same time we have to give benefit of the doubt to the buyers. So then this thing market got up because low, higher low, higher low, higher low. Benefit when the benefit of the doubt goes to buyers, it means there's a higher chance. Doesn't mean it's 100% absolute. It must happen. Things can change, but as long as this market continue to move in this trend, cultivating higher lows and higher highs, we have to give benefit of the doubt. When we do see a pullback, we have to assume that it is pulling back to cultivate that higher low, which this market have done in the last couple weeks here, right? And we're now back above it. So let's check out that oscillator, and maybe we can refine our analysis that we've done here today. So oscillators actually still giving us bearish sentiment, right? So we talked about that bearish divergence right here yesterday, and with that we saw that gap down. But again, because we're still on an uptrend, because we got some of these rising pivots and supports and moving averages, and we're still on an because we're on a short-term uptrend, we see a pullback, market gets back up, and obviously this oscillator did pull back. We haven't even crossed back up yet, so we are still kind of in this selling bearish sentiment in the short term, according to my oscillator, right? And we just fill that gap, right? So if the bears want to see this thing at this oscillator coming back down all the way to bottom of its band, they need to pull something. Gap down, massive early selling pressure. Right? That's what we call shenanigan. The reason is that because everything right now, as far as the price is concerned, with the higher lows and higher highs, with the uptrend support, filling the gap, actually supports the bullish thesis. The reason is, if we do see any kind of bullish move to the upside, or even if we do see sideways move, because we see 4 hours of bullish rally today, last 4 hours, this thing gonna start to turn back up. If price goes higher, that oscillator is gonna turn back up. If price moves sideways, the oscillator is still going to turn back up. You see what I mean? So there's actually only about 30% chance, 33% chance bears can pull something here to try to bring that back down. If not, there's about 65% where bulls can bring the oscillator back up. And if they do that, there's a whole lot of room to be made right here, right? So I think it's going to be important tomorrow morning if the S&P, the spider, can stay above 391.70 or 50-ish first 2 hours. We want to assume that the trend is going to continue and the oscillator is going to cross back up. If we see any kind of gap up, any kind of first hour big pressure, this thing is going to cross up and we're gonna see the rally continuing after 4 hours of rally from today after gapping down. Let's see how it plays out tomorrow. Enjoy your evening and good luck trading tomorrow.